investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And as I do each and every week, I leave my lines on the chart from the previous week so you can see exactly how things played out. Now follow closely here, because this is where the report went out. It was last Friday. You can see that I forecasted that the market would go up early on during the week and eventually come down as the week progressed. And look at how closely the low from yesterday's trading session came to the bottom of my line, which is where my forecast ended, right there. Just absolutely amazing. Now, with that said, we could now erase these lines from last week's chart, and I will forecast what I believe will happen next week. You see, this is a long shadowed candle that occurred on Friday, and when you see long shadows under the candle, it tells us that the buyers are massing up and really presenting a fight to the sellers. And as you can see, on Friday we had a slight gap up on lesser volume. Now follow me here, because this is very important that we look at the volume as we move on into the forecast. You see, there's a small gap right here. That gap is really where I believe we're going to hit a bump, or you can say resistance. I believe that we will move up to test and fill that gap, and then from there I think we're going to reverse, mainly because 80% of the time after a gap fills, the market will reverse. So here's the forecast. Ready? A little bit higher, like we had this week, to that gap point, and then I think we're going to pull back from that point. The telltale sign of a weakening upward move is found in the lesser volume. So although we had a green candle today, the volume was about 15% less than it was the day before. Here is the gap. Remember, that's what I'm talking about. That gap, once it fills, there's an 80% chance that the stock will reverse from the gap fill point. So that's the diamonds. If we look at the spiders, again, the lines are on here from last week. You'll see the exact same scenario took place, where I said we would go up a little bit, and we did, and we came down. Look at that, amazingly, right to this low right here, within pennies of that low, and then we came up. Now, if you look at today's trading action, this is the 11th of March, you'll see another shadow underneath the candle, which basically tells us that the sellers tried to push it down to the low, and they weren't able to hold it on the low, so the buyers came back with force. But the main thing here is that if you look at the gap that was filled right here, we're very, very close to a gap fill point right here. So I'll erase this line here, I'll erase that, and I will erase this line right here, and I'm going to draw my lines for next week. Again, maybe just a slight uptick Monday or Tuesday, and I think we're going to bounce or pull back from that resistance high, in an 80% chance that that gap will fill and reverse as well. So we're seeing a very strong pattern here in the upticks, but I think it's going to be short-lived as we move into next week. Now, if we look at a more broad-based index, that's in the Russell 2000, you'll see that we had that long shadow yesterday. I did say last week that we would pull back. We did that. We even came down a little bit further than where I forecasted this low right here. I'm going to reverse that line right there, and I'm going to suggest that we are going to see slightly higher in the Russell 2000 to there, and then a pullback. So keep that in place for next week and follow along with me so you can see how accurate these charts really are. Now, if we look at the Nasdaq, basically reflected in the power shares QQQ, you'll see that we pulled back again. This is almost uncanny how well the forecasts are. I said that we would pull back on the Nasdaq. That's what I drew last week. Remember, these lines here, these candles, had not yet formed when I drew this line. So this was all blank air, or basically blank charting space right there, and I said we would pull back. We did. Again, pulled back a little bit further than what I said we would pull back to right here. Actually, Wednesday touched my target low right there, and then we bounced. So again, lesser volume is a big part of this story. Keep in mind that there's still a gap over here in the Nasdaq as well. I think we can continue a little bit higher on the Nasdaq next week. I don't think the Nasdaq is going to pull back right away until we see that gap fill point, but I will erase this line. The Nasdaq is actually looking more positive than the other indices that I drew because of what we saw in the gap being a much higher level than the other gaps that I've described for you already. So I think we'll continue to go up in the Nasdaq, and we're still in the January effect cycle where even though here it is March, the small cap stocks tend to get bought up more than the large caps, so I think the Nasdaq could move up a little bit more before pulling back. So we'll have to take a look at that next week before I change my lines there. Now, if we look at the volatility index, this is the CBOE volatility index, ticker symbol VIX. You'll see that I forecasted that we would go up. We did that. We didn't go quite as high as I thought we would, but remember this is a contrarian indicator that works opposite to the S&P. So now that we see this red candle here, I see a support level right here. I'm going to draw my support level here. I'm going to remove this support level right here and follow along here. This is what I think we're going to see. I think the VIX will drop a little bit more to test that support, and then I think we're going to bounce off of that support. So if the VIX is moving lower, the S&P will start to move higher, and that's what I suggested already, that we're going to move up to fill the gap before pulling back. So that's really how we look at the charts, and it's pretty straightforward once you learn the signals. And if you would like to learn more about some of the things I've mentioned, just go to themarketguys.com, click on the video tab right there, and it will bring you to a video library that talks all about these things I've mentioned, and including the gaps. Right here, down a little bit way on the page on the right hand side, you'll see trading the gap. All you have to do is click on that video, and it'll play about, I think that video is 5 to 6 minutes long. Learn how to trade the gaps, learn the importance of how to read the gaps, and you could also look at the strong percentages of reversal once gaps form. You'll see that there's a very, very reliable way to trade without taking too much risk. So that's it for now. It's the Market Guys Weekly Market Report. Thanks for joining. We'll speak with you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.